Hello and welcome. You're watching Closing Breeze right here on ET Now. I'm Shrishti Sharma and with me is Snehi Shah. And Snehi, what a recovery for the markets from the day's lowest point. Indeed,
Absolutely.
Nobody was actually anticipating it, barring Kunal, because we did interact with him at the start of the show, like at the start of the trading session for today. And he was of the view that one can actually look forward to buy the dips. And that's exactly what we are seeing happening. Good recovery from the day's lowest point for Nifty as well as Bank Nifty, because Nifty is getting closer to that 25,000 mark on an intraday basis. We try to and manage actually to surpass that level as well, but the real action is indeed in the broader end of the market because they are flaring up higher. They are almost at the day's highest point as we speak, and despite the fact that the benchmark indices have been languishing, the broader indices, they are holding on to the gains of over 0.5% as we speak right now, and bigger gains coming in from the small end of the market. But along with that, there are a lot of counters that are buzzing. Case in point being Trent and BEL from the Nifty 50 pack. They are the counters. They are leading it from the front. After that, inclusion of theirs on Sensex 30, and that's the trigger point for both of these counters. Select metal counters are doing well, case in point being Hindalco, which is the third top gainer for the Nifty 50 today, and select Adani group of counters are holding up well. What's not doing well and what hasn't done well throughout the day is actually the IT pack, languishing. After that, Accenture numbers coming in, Infosys, HCL Tech, they are actually one of the drags in the Nifty 50, and Hero MotoCorp for the second straight day, bigger cuts coming in on this counter as well, almost a 2% decline as we speak right now. But the breadth of the market looks quite cheerful, Snehi.
Absolutely, breadth of the market looking good, and one stock that's firing away in today's trading session is Z Entertainment. That stock has been doing very well ever since its presentation came out, and over there they have listed their FY26 focus areas, and they wish to achieve break-even in Z5 from EBITDA loss of 548 crores last year. So big target and ambitious goals they have set for themselves, and they also want to focus on execution of business plans to achieve 100% target. They've also they're aiming at a risk-free treasury income, and they're targeting 17.5% TV viewership, up from 16.8% last year. Very positive ambitions coming in from the company. It looks good going ahead. Remember, the stock was also in focus last week when they had said that they have increased the promoter shareholding, or they aim to increase promoter shareholding by issuing 16.95 crore convertible warrants, and the promoters are going to be pumping money into the company, and on the back of that, that stock did well last week. It's doing well again today, up 10.5% almost as we speak. Other than this, another stock that's in focus today, and this group of stocks is the rice group of stocks, because remember, given the global backdrop that we have right now, these rice stocks like LT Foods, KRBL, they are in focus because India's biggest export to Iran is basmati rice, worth about 734 million US dollars thereabouts. But LT Foods today also in focus for another reason, because the company has on one hand clarified that they do not have much exposure to this Iranian region. Rather than that, this stock is in focus today because the US Department of Commerce has imposed their highest possible countervailing duty rate on organic soybean meal exports by EcoPure Specialities, which is LT Foods group company. This is a 340% rate that they have put on the company, and just a few minutes ago we have clarification coming in from the company that this is worth 50 crore rupees. So that's a big setback coming in for its subsidiary, and they're saying that there's a solid legal case that the company can pursue, and they are planning to pursue that. So that's the latest update coming in on LT Foods. Other than that, like Shrishti mentioned, you have a lot of stocks that are in focus today on the back of this BSE rejig. Trent and BEL, they're entering Sensex 30 from today. So those are the stocks that are in focus. So all of these stocks are in focus in today's trading session. But let's bring on board Kunal and Sunil sir, who are joining us right now. Kunal, once again, we'll come to you first and talk to us about something that you had told us at the start of the day, and that has panned out like Shrishti mentioned. You did say that investors would buy the dip, and we have seen significant recovery. At least we've seen recovery on the index, and the broader market has been a whole different story today.
Absolutely, Srishti. Sneh and Srishti, yes, we flagged off in the morning that 24,850 thereabouts is a very important support. I think we managed to make a low almost precisely at the 24,850 mark on the index, and post that we've seen a very good recovery. So after being down almost 300 odd points at one point of time, I think it's good to see that the markets have recovered and come back to I would say quite a flattish territory for itself. Now, today's highlight is more in the market breadth, and especially at the start of the day. Especially, I think the mid cap index was flat to just about flattish when the index was down 0.5% to 1%. That itself was a very strong indicator that not all stocks are are showing signs of buckling down after this kind of a gap down opening. So which means that we are looking at a point where the markets would eventually want to digest all of this negative news flow surrounding, and we may see a breakout on the upside. So I still stand by with what I discussed in the morning, that this is a dip which one should be looking to buy into, especially given the fact that the markets are still showing signs of robust price action on individual stocks. You look at the volumes across individual stocks, which are seeing good price movement, and that is also a very strong indicator that we are not seeing a very low volume kind of a buying. You're seeing a very high volume kind of buying for individual stocks. So that's also another indicator to watch out for. Over the next couple of days, I would expect at least a retest back to that 25,050, 25,100 mark where we closed on Friday.
All right, so that's the day coming in on Nifty 50. One can still look on to buy the dips when it comes to the index. And yes, of course, a decent recovery, what we are seeing on the banking index as well. But Sunil, share your thoughts on the once again rise in the geopolitical tensions and its implication on the markets, especially the Indian markets, because Sunil, we have of late seen that the markets do climb the wall of worry, and we have seen so many instances, especially in the past 2 years.
I think that's due to the strength of domestic liquidity. I think if you look at the numbers for the mutual fund industry, for example, flows have been consistent, and gross flows, I think net flows were just below 20,000 last month. But if you see the gross flows, they've been stable at around 55,000 crores. So I think that in the SIP book coming in at about 26,000 crores means that fund managers have got adequate liquidity. But the nature of that liquidity is a little more tilted towards mid and small caps. That's why you've been seeing that consistently when global events have been happening, FIs have tended to get nervous, especially this time because of the oil spike. They have tended to pull money out from the market, but domestic fund managers with ample liquidity have stepped in. And what reinforces this is the fact that the domestic economy is chugging along well. Today, the HSBC PMI index numbers have come in. Both the manufacturing and the services PMI are trading above 60, and the composite PMI is a 14-month high of 58. So the domestic economic news is good. Domestic liquidity is strong. So FIs will be nervous because they apprehended that Iran would do something about the Hormuz Strait, and they expected oil to shoot up. But as we saw during the course of the day, oil was fairly stable, only hitting about 76. So I think that there is enough supply. Though 20% of the world's oil goes through the Hormuz Strait, Iran's oil that also goes through. If Iran is going to sustain the war, they can't shut their own ships from going. So I think to some extent, there was a little bit of a knee-jerk reaction to that. Oil may still trend higher based on what Iran does, but I think that FIS nervousness related to oil to India is driven by the 85% import that we have of our oil requirements and the fact that the currency will tend to weaken, making all our imports more expensive. So I think this is something that foreigners, when they look at it as a comparative play among various countries, right, they feel that, India, they can take money off the table. But domestic liquidity, as even this month, has been fairly strong. I think it's more than 60,000 crores of buying just by mutual funds. That's the reason that every such dip is viewed as a buying point. And these fund managers had their liquidity building up over the last 2 months, because while the earnings season was in progress, they were not fully deploying. So they were all at the end of May, they were sitting on pretty decent amounts of cash. And I think that has come through to the market this month. So I think that situation will continue. You will see volatility in the market because geopolitics obviously creates nervousness in foreign investors. But I think domestic fund managers are tracking individual sectors and stocks. And when they see the FIS ceiling brings down those values closer to the average, Indian markets are not cheap still. We are still trading at a fairly rich premium, I would say, to other emerging markets. And maybe at a Nifty PE of 21, we are just about the long-term average. So we are not cheap yet. But fund managers are tracking sectors. And when they see dips in certain sectors because of the selling, they will step in to buy. So I see a period of consolidation in the market, but there won't be a deep fall because there's enough liquidity to support any stock price which corrects sharply. There will be buyers found in the domestic scenario.
Appreciate that view, Sunil sir. Let's slip into a very short break on that note. But before we do that, let's take you a little away from markets and tell you what's happening in the world of politics right now. Numbers are trickling in for bipole elections in 5 assembly seats. Remember, voting took place on the 19th of June for 2 seats in Gujarat and 1 seat each in Punjab, Kerala and West Bengal. So far, Congress-led UDF has been confirmed to clinch the Nilambur constituency, which falls under Wayanad in Kerala. BJP is leading in Gujarat's Kadi constituency, while Aam Aadmi Party is leading in Visawadar. In West Bengal, TMC is currently leading the race in Kaliganj constituency, whereas AAP is surging ahead in Punjab's West Ludhiana constituency. But on that note, we'll slip into a very short break and be right back on the other side to discuss the last hour of the trade. Hi there, welcome back to Closing Trades. Now let's bring you some news and updates because Air India has announced temporary cuts of less than 5% to its overall narrow-body flight network, the Tata Group airline has said in a statement. This comes amid India's aviation regulator DGCA unleashing a comprehensive scrutiny on the carrier's overall operations following the 12 June crash of a 787 Dreamliner in Ahmedabad. Samir Dixit is bringing us all of those details. Samir.
It seems that the problem or the challenges with the Tata Group owned airline Air India, it is not coming to an end. On one side, the airline is facing a tough scrutiny from regulator DGCA. On the other side, the airline is forced to reduce its flight frequency from narrow body aircraft to wide body aircraft. Now talking about the scrutiny part, so DGCA has initiated the review of Air India, its Gurugram based headquarters, and the review or the scrutiny will be done on various parameters. The first one is the aircraft that the airline is having. So how far the aircraft records are being maintained, the airworthiness of the aircraft. In addition to this, the cabin crew, the pilots, their duty timings, the rostering of the staff and also the training of the cabin crew or the pilots. These all important things will be reviewed by the regulator. In addition to this, DGCA has also asked its inspector to provide the details of the safety inspections or the audits done since 2024 of Air India. So that sort of detailed scrutiny the airline is facing. On the other side, the airline is forced to reduce its flight frequency for multiple reasons. On international side, majorly it is because of the global turmoil. On Sunday, Air India has announced that they are going to reduce the flight operations of narrow-body aircraft by around 5%. This means that 118 weekly flights are going to be reduced. It is going to be impacted, and on 19 routes, the flight frequency it is going to be reduced. And on 3 routes, it is being temporarily suspended. On international routes, especially to Europe and America, the wide-body aircraft, the flight frequency has been reduced. So definitely Air India is facing a lot of tough time and they are looking for some glorious days ahead when all these things will be passed on.
All right, thank you so much, Sami, for getting us all those details to tell us what's really been happening in the latest on the front of Air India. But with this, let's me also welcome on board Kapil Shah, who is joining us on the show right now. Kapil, help us firstly with your take on the markets. It's been a smart recovery from the day's lowest point, but do you see Nifty crossing and sustaining that 25,000 mark as we approach towards the monthly expiry?
Good afternoon, everyone. So from past 30 trading sessions, we have been seeing that the market is trading in the range 25,200 on the higher side and 24,500 on the lower side. But within that particular thing, there is one micro range which we are seeing that 25,000 as an upcapping thing and the 24,800 as a lower band support that we are seeing. So today also the market has seen some sorts of reactions from the 25,050 also level, and this particular level from past 10-15 trading sessions, at least 4 to 5 times market has reacted from this particular point. Yes, the market internal strength is quite good. After seeing some sorts of setbacks, we have seen the recovery. Mid caps are covering very fastly. They are trading on the positive note. So eventually, yes, this is what a matter of the confirmation that we have to see to make a little bit more bullish tone on the market. But 25,000 is the one particular level that we are seeing that once the sustainability over there we see, we can have the further view. But we are waiting for the 25,000 sustainability on that particular point.
So those are levels that Kapil is watching out for. But Kunal and Kapil, now time to get some of your closing trades, our mid-cap ideas for the day. Kunal, what about you? Where are you placing your bets?
So in terms of the closing trade, I would look at Tata Power. I think that's a chart which is looking attractive in terms of risk reward. We've seen power stocks slowly and steadily, seeing some bit of buying. It emerged with Power Grid. Then I think last week we saw Power Finance sector also starting to look up attractive. So now I believe that Tata Power could also come back into a momentum as well as a turnaround mode. At current levels of 390, the risk reward is attractive for traders to go for a fresh buy.
Right, but Kapil, what about you? Which are the stocks that you are eyeing?
Yeah, eyeing on the Grasim, which is trading at a 2730 level. Technically, the stock has been a positive momentum. Then there is some sorts of a declining momentum is happening, but now the things are gaining its ground. So we are seeing some sorts of a bullish continuation sign right now. The 2730 level with a 2675 is in stop loss that we are seeing, and about to that the target potential we are seeing that 2850 will be the first upside potential.
Okay, so lots to watch out for. Grasim is something that Kapil is liking at the moment. On that note, we'll step into a very short break, a quick one, and we'll be right back to get more of Sunil sir's thoughts on where the markets are shaping. Hi there viewers, welcome back to Closing Trades. Let's talk about the last half an hour of trade, and before we talk about our markets and the recovery that we've seen, there's another spot of recovery that we're seeing and we're tracking very closely right now is the US futures as we speak, because what a recovery we've seen from the deep shade of red that we were seeing on the futures in the first half of the trading day. You have a Dow that's now slipped into the green. In fact, S&P and Nasdaq also these futures are in the green right now. Dow futures up 0.1%, S&P futures up 0.2%, and Nasdaq futures up 0.3% right now. This despite the escalation that we are hearing about in the West Asian region. European markets too are not doing all that badly. If you take a look in today's trading session, let's pull up some of the European markets if we can. And well, Stock 600 is down 0.1%, but you have FTSE that's absolutely flat, and DAX and CAC are down 0.2%. So it's not all that bad when you take a look at the global backdrop. So Neil sir, just on that note, I wanted to get your perspective on the kind of market reaction that we're seeing, especially in front on the US futures front. Do you believe that this escalation is now largely being priced in by the market and not much can go wrong from here, at least from the market point of view?
Because the US has also threatened further strikes. So what it means is that the likelihood that Iran's defensive capabilities gets crippled, because I think Israel is also now attacking their missile bases after attacking the nuclear bases earlier. So I think that what it means is that I think they see this as that Iran has not much choices, and that enough pressure could be brought in through China on the Hormuz Strait issue. I think markets are reflecting that because I think almost entire Iranian production is sold to China. So clearly China is an important factor there. So I think what the markets are realizing is that the surprise action by the US and the threat of further action would probably keep this from escalating, because Iran is getting crippled, day by day by these joint strikes. So I think that's where even oil prices, if you see, they were already at a 75 levels, and today there was a fear that they would cross 80, but even with the threat of a Hormuz closure, they've stabilized at around 76. So I think overall the world is absorbing the fact that US will ensure, I think, by further attacks that actually Iran may not be able to do much. I think it's a kind of a read that's happening. And to that extent, I think the world has also got used to these geopolitical shocks. So no longer are the reactions as extreme as we saw when the first Russia-Ukraine war broke out, or when the first Hamas attack happened on Israel. Now the reactions are far more subdued because people are realizing that these things don't last very long. So I think that's the fact that the market expects that maybe in a couple of weeks or a month or so, this situation would be behind us. So I think market is tending to read into the future. And as they say, right, you buy on the rumor and sell on the fact. So the fact that the action has happened has eased the thought processes of the market a lot.
All right, with this, we let you go on that. Mr. Subramaniam, thank you so much, as always, for taking the time out and speaking with us, and also giving us a sense what to make of the rise in the geopolitical tensions as well as its impact on the markets. But moving on then, and our correspondent Priyank has been covering all angles of this developing story from Tel Aviv. Let's go across to him for the latest. Priyank?
Explosions were heard here in Tel Aviv, which clearly means that the situation is certainly difficult and more serious this time. Let me show you to our viewers because we are in the heart of the Tel Aviv, and as you can see, these vehicles are stationed. They are not moving because of the the air siren alert which has come up, and these high-rise buildings are certainly the prime target for the Iranian forces, because over the period of last few years, months, what we have seen after a barrage of missiles which has been fired towards the Israeli side, that ballistic missile has come up as the biggest threat, because the Israeli air defense system is certainly not somehow capable enough to deal with these kind of ballistic missile, although the small drones and small missiles could have been dealt, which were fired from the Hezbollah side. So reporting from Tel Aviv, what we can tell you to our viewers, that you can imagine a city which is certainly silent. No one is on the road, obviously because of the air siren alert. But I could personally hear 4 loud explosions. We are yet to verify the location where these explosions has happened. But since morning, this was the second alert which came up.
Okay, Priyank, thanks for taking us through everything that's been happening and all the action from the ground. Let's also welcome Sunny Agrawal, Head of Research Fundamental Desk at SBI Cap Securities on the show right now. Sunny, hi, good afternoon, and thanks so much for joining us on the show. Give us a sense of what you are making of the market move, given that we have seen a spike up in gold, but it's not a flare up like Nikunj was mentioning in the morning. And also, other than that, gold has softened. One would expect the opposite reaction given the geopolitical backdrop right now. What are you making of the market moves?
Good afternoon, everyone, and thanks for having me on the show. I think the uncertainty pertaining to the tension between Iran, Israel, and US seems to be waning off. The reason being that the motto of US and Israel was to stop Iran from pursuing the nuclear ambition, and since most of their facilities has already been damaged by US, and US has been on record to say that unless and until Iran retaliates significantly, I think they are not very much keen on further attacks on Iran. So I think this event is already being discounted by the market, and in case there is no further major escalation between Iran, Israel, and and US backs off from all this chaos which is going on, then we feel that uncertainty is behind us for both equity markets as well as precious metal like gold. So that may be one of the reasons that gold is trading soft in the trade today. Coming to equity market, again, we believe that market continue to remain buy on dip kind of market, wherein any dip due to this ongoing geopolitical tension should be taken as an opportunity to accumulate quality stocks across rate sensitive sectors such as NBFCs, real estate, and automobile sector.
The take coming in on the markets, but let's also have a look at some of the movers and shakers in today's trading session, and 2 of the counters that have made their entries into Sensex 30 are rather buzzing. And Kunal, just wanted to have your take on BEL and Trent, because in this particular news flow there's a chance that the passive inflow can actually come in both of these stocks, and that is indeed taking the stocks higher. But technically, how are the stocks placed, and is today's move backed by good volumes?
Yeah, it's been backed by decent volumes for both BEL as well as Trent, and both of them are different charts altogether. BEL has been enjoying its steady uptrend over the last many weeks and months. The stock formed a bottom closer to the 250 mark, start of the month of March, end of February 2025, and from there the stock has now crossed levels of 400 plus. So it's trading at 420 mark, which means it's a very good recovery for a stock like BEL from those 250 levels to 420, by a margin of more than 50% kind of a rally for the stock price. But then I think what matters over here is the likes of Trent, which has also made a very strong comeback. And if you look at the last 3 to 4 months of chart, the stock price had seen a lot of badgering. We'd seen the stock falling down to 5,000, sub 5,000 levels also. But the way the stock has recovered in the last few sessions, volumes making a comeback. Now I think at 6,000 plus levels, the stock is also nearing a break of its 200 moving average. So a lot of positives emerging for a stock like Trent at current levels. And we know the history of the stock price, that whenever the stock gathers momentum and regains its beta nature, we've seen historically that the stock has capacity to move even in periods of 10 to 15% consistently for weeks. So I think in that sense, we may probably expect that the same behavior for Trent may come back pretty soon. I would believe that it's a good zone for traders to start accumulating both of these names, BEL as well as Trent.
Okay, so that's on the technicals for BEL and Trent. But while the BSE Sensex reshuffle has become effective from today, you have Trent and BEL that are replacing Nestle and IndusInd Bank. Let's talk about what the estimated inflows and outflows could these stocks see potentially. And Ravinder is here with all of those details. Ravinder.
Well, as earlier BSE has announced reshuffle of Sensex index, which will be effect from 23rd June 2025, and the Trent and BEL will enter the Sensex index with effect from 23rd June. And as per Nuvama alternate, together this addition are expected to trigger a $708 million in passive inflow, and BEL could receive $378 million, and Trent could receive an inflow of $330 million. And while Nestle India and IndusInd Bank will exclude from Sensex index, and Nestle India is likely to see an outflow of $230 million, and IndusInd Bank may see outflow of $145 million. And among other changes, Ultratech Cement will see a marginal weight increase with estimated inflow of $4 million. Meanwhile, HDFC Bank, Bharti Airtel, Reliance Industry, ICICI Bank, Infosys, Sun Pharma, L&T and ITC are expected to see a minor weight reduction, possibly resulting in the limited passive flow, whereas HDFC Bank reduced weight in the BSE Sensex will result into outflow of $46 million, and it is followed by the Bharti Airtel, which will report outflow of $45 million, and L&T weightage reduction in the Sensex will set to result in the outflow of $14 million, while ITC and TCS outflow are estimated at $13 million and $12 million respectively.
All right, thank you so much, Ravinder, for getting us all those details. So yes, on the back of this news flow, at least two of the counters on the Nifty 50 side, they are buzzing in today's trading session. But one such stock from the metal pack, and that is Hindalco. That is also doing pretty well. The stock is holding on to the gains of 2%, and that's been the case throughout the day. And Kapil, just wanted to have a chart check by you, because stock like Hindalco has been holding those levels of 650 rupees. What do you make out of it?
In the past couple of days, the metals sector's momentum has remained a kind of the back and forth. Means a couple of days they have moved up, then couple of the days they have moved down. But within that particular pack, the non-ferrous segment that we see, like in aluminium, zinc, and copper, we have seen some sorts of a structural momentum. Yes, in the zinc, we have seen a very strong round of the profit booking, but aluminium and copper, they have maintained the momentum. And coming to the Hindalco side, stock on a broader scale has remained in a one range. On the lower side, the stock has taken the support at the 630 level, and on the higher side, the stock from past couple of weeks facing the resistance at the 670 level. Still, the underlying tone is a sideways to a positive, but to gain the momentum, we will see that if stock sustains above the 670 level, and above the sustainability 670 level will attract the further buying.
So that's the take on some of those metal counters. But Sunny, what's your take on IT? We've seen a big trigger coming in terms of Accenture numbers, and we've seen the ripple effect on Indian IT. IT as a pack has been surging since a couple of trading weeks. We've seen sector churn positively impacting IT. Now with this downfall that we've seen, do you believe this is the beginning of the correction for IT, or today is just a one-off on the back of this Accenture news flow?
Again, coming to IT, if we take a step back during the March quarter results commentary, we have seen that most of the management were not very clear in terms of the growth outlook because of the uncertainty pertaining to trade war or geopolitical tension. But now, with a trade deal between US, China, or for that matter, any other countries are on the, and we believe that the uncertainty has reduced significantly, and that has been backed by the strong set of number by Accenture, especially for BFSI as an sector. So there we have seen a kind of 13% growth, which predominantly contribute majority of the revenue for frontline IT companies which are based out of India. So I think at least the worst is behind us as far as IT sector is concerned. So basis the commentary of management on the demand environment in upcoming results season, I think the stock selectively should start outperforming the larger pack. So if I have to choose few of the names among the IT pack, the few stocks which are on our radar, one among the frontline is SCL Tech. So there we feel that SCL Tech can outperform its peers. Tech Mahindra, there we can see a continuous improvement in terms of numbers. So that's the kind of turnaround story as far as frontline IT pack is concerned. Among the mid-sized player, Coforge, which is backed by a very strong deal wins recently. So Coforge is the one stock which we like. And another stock which we like, which is likely to post a kind of double-digit growth, is First Source Limited.
All right, so those are the top bets when it comes to the IT pack. Let's watch out for that. But just a few minutes left for the markets to shut shop, and let's also get you some of the btst or STBT ideas from our experts then. And Kunal, you go first. Tell us which is the stock making to your list.
So two buy calls focusing on large cap names. BPCL is the first stock which I would suggest as a buy. I think this could be a good time where many of these OMCs could actually make a very strong comeback. We've seen that these stocks have been a lot more resilient. BPCL is one of them. Would look out for targets in the range of 325, stop loss at 307. And Eicher Motors from the auto pack is another auto name other than the likes of Escorts, etc., which is looking very attractive at current levels. So the stock is confirming a breakout above 5500 mark. So would keep 5460 as a stop loss and targets on the upside as 5700 for Eicher Motors.
Okay, so a couple of stocks that Kunal is liking right now, BPCL and Eicher. Kapil, what about you? What's making it to your radar? What are some BTST trades you would recommend?
In today's situation, we are seeing that the CPSE sector has gaining some sorts of momentum, and out of the CPSE sector, the NHPC showing some sorts of traction. Today it is up by more than 3%, trading in an 85 level. So expecting that if this particular momentum can spill over in the coming sessions, and the upside momentum can be up to the 87 level, and on the lower side, 84 level will be the stop loss.
Okay, so that's the take on NHPC. But Kunal, coming to you, since morning, I've been meaning to ask you this. You've been very positive on auto stock since the morning. Now, the kind of sector turn we saw with IT, do you think auto is another IT in the making now?
Yeah, so this generally happens, Sri, because initially when a move has to start off for a sector, there are few leaders which emerge as a breakout candidates. They take the charge up front, and then follows many of the other underperforming stocks, which eventually makes a comeback. Now you look at the composition of stocks within the auto pack, which have made a very strong comeback in the last few days. You've seen M&M coming back to the 3,000, 3,100 mark. The volumes in the last 2-3 days was nothing short of exceptional. Maruti has made a very strong comeback, about 12,000, 12,500 mark. Eicher Motors is another name which has made a very strong comeback. And then you look at the underperformers, relative underperformers as such. You've seen Escorts, TVS Motors, even these stocks have started to show signs of strength. So that's a very strong indicator that we are looking at a strong relative strength building up into the auto sector. And this was the only sector which has been an underperformer as such, from a zone where many of the other sectors had actually outperformed. So there was a point where the auto stocks would start to diverge with the initial performance and then converge with the markets. I think we've hit that zone for the auto pack, and that's why I would believe that over the next few days, weeks, you might see many of these auto stocks potentially making maybe new swing highs, or some of them even capable of making new 52-week highs for themselves.
All right, so quite bullish on the auto pack. Let's watch out for that. Yes, of late, on the back of select news flow, two-wheeler counters are definitely feeling the heat. But let's wait and watch that whether or not we are in to see some substantial recovery. But all in all, it's been a decent day for the markets because of we have seen decent recovery for the benchmark indices. The broader markets have been participating for the majority part of the day, and select counters have been doing well. But within the PSU pack, what I can see is that in the last 30 minutes or so, stock like Coal India is also showing an up move. Other than that, it's Bajaj Finance that has finally made into that list of gainers on the Nifty 50 side. But another pocket that has been doing pretty well is the whole wire and cable segment, because stocks like Polycab, KEI, they have been buzzing around since the start of the day. And Kapil, any such stock within these two which is still looking good to you on the charts, backed by good volumes, and would you recommend a BTST or STBT trade? Kapil, this question is for you. I guess you have to unmute yourself.
It's an unmute.
Okay, now we can hear you.
Am I audible?
Yes, now we can hear you. Please go on.
So yes, Polycap means yes, today it has picked up the momentum and up by 5%. But overall, I find that the stock is near to the resistance point, so not to chase the momentum into the polycap. But looking at the KEI, so where there is some sorts of a fresh upthrust is happening, so I prefer the KEI more than the polycap. And in the KEI, 3755 is the current level. And if we have a shorter term view, it can have the potentiality to move up to the 3980. Maybe we have to hold a couple of days position in this particular stock, but KEI looks better than the polycap.
Okay, so preferring KEI over Polycap, that's the take coming in on the entire wires and cable space. But Kunal, as we are wrapping up, last few minutes left of trading session, give us some sense of what we can expect tomorrow's trading session to look like. While we have seen green on the broader end, can we expect to see green on the benchmarks tomorrow?
Yeah, I think we should be, because I think now we could be at a point where the global markets would start to turn positive. Now, if that happens, that's going to have a positive effect to our markets, pretty soon. Over the last many days, we've seen GIFT Nifty trading with a negative bias purely because of the fact that the global markets and the weight of news flow was not into the positive side for our markets. But I think if that starts to trickle into the positive side, you may pretty soon expect the index to also come back into a breakout mode. So I think what we've been doing over the last few days is just to try and be as strong, as resilient, as mature in terms of trying to absorb the news flow surrounding the geopolitical side, and then still remaining to a range. Now, the moment the market gets a whiff that this news flow would start to abate, as well as the negativity would start to reduce or ebb off significantly, that's the time where the markets would start to anticipate and get back into a breakout. So I believe that potentially over the next few days, we should be heading towards that kind of a breakout levels, provided we see those global markets starting to look a lot more attractive and heading to those individual breakouts for themselves.
All right, so that's the day coming in on the benchmark indices, hoping for a positive day coming tomorrow, given the fact that the global markets also turn positive. But yes, on the future front, we are seeing that happening too. But before we should shop, just wanted to have a take coming in on Dixon Tech, because Kapil, on the fundamental side, we always touch upon the kind of higher valuation that Dixon Technology commands, but there's been no stopping for this particular counter as well. See the levels is holding above that 14,000 mark. What do you make out of it, and where do you see the stock headed?
Basically, in the overall trajectory of the market, the one particular sectors that we have seen that they have remained under a little bit pressure, that is in the consumer durable stocks. But within the Dixon, there was a positive trend. But right now, the way I'm seeing the price momentum and the slopes of the short-term to long-term moving averages, they are getting some sorts of a flattishness. So I will prefer to have a little bit more clear setup the way the Dixon is showing right now. So I will be under the waited watch mode under the Dixon to gain a little bit more attraction. Above the 15,000 level, we may see some sorts of breakout, but I'm a little bit conservative at this particular point on the Dixon.
Okay, so that's the take on Dixon Tech. But as we wrap up, and Sunny, before we let you go, any final comments that you would like to share with our viewers on where you see the markets headed in the near term?
Yeah, so we continue to remain constructive on market and stand by our stance of buy on deep. And again, in terms of sector where there is an opportunity, obviously the top picks remain NBFC. So a non-banking financial services company focus on housing finance as well as vehicle finance and MSME pack. So these are the three packs where we are bullish on. Coming to auto, again, tractor as well as two-wheeler pack is the place to be in. At the same time, auto and there are many names which are likely to perform well over the period of next 4 to 8 quarter. So those are the few names which one can add. Another one theme which we are bullish on is a recycling theme. So within recycling theme, if somebody want to add in his portfolio, that can be one theme one can look at in an overall in the current deep. But again, we continue to remain constructive as far as the short to medium term horizon is concerned.
Okay, well, moving away from that, thank you, Sunny, for that view. But given the geopolitical tensions, where is the market heading? Will the tariffs deadline be extended? We caught up with Aman Chauhan of Abacus Asset Manager LLP this morning to decode just that. Let's go across and listen in.
What has happened in the last year and a half, there have been some issues like this, and the recent geopolitical issue where India and Pakistan are also involved. People have bought on the dips, and that has helped them, that has worked for them, right? I think the same thing is happening here. We all hope these things don't escalate, But if it escalates, I don't think market is prepared for it. We can see a deeper correction if things go out of hand or get ugly. Markets are poised saying that there will be some announcement ahead of the 9th July deadline, and there will be further countries which will be getting into, you can say, concrete tariff discussion with US and conclude on that. I think the risk there is things can get delayed. The way things are right now, there's not much of progress that we have seen selectively with respect to various countries that are in right now negotiating with US. And I believe US also has got distracted on in the Middle East. So there can be a further, you can say, pushback to the deadline, and that should be neutral for the market, I would believe.
All right, Kapil, Kunal and Sunny, thank you so much for joining us on this edition of Closing Trades. But with that, let's start wrapping up for the market close today and see how we're shutting shop today. Only a couple minutes left, so let's take a look at how the markets have managed to perform in today's trading session. Nifty 50, a 0.6% cut coming in. We've seen a little bit of a fall in the last couple of minutes. We had surpassed that 25,000 mark and we were there for quite some time. But now we have slipped off the day's highest point, but nonetheless, it is not as bad as it could have been. Sensex 2 in tandem with the Nifty, or slightly lower rather, 0.7% cut coming in on the Sensex. You have advanced decline ratio that is still in the favor of the declines, but a lot of the stocks have slipped towards the advances today, and that is where the real market recovery is being seen. India wakes exactly at 14, almost 2.5% higher. Still, once again, not as bad as it could have been, so looking very good on this front as well. It's really the broader end of the market that has outperformed the rest of the market today. Nifty mid cap up 0.3%, slightly off the day's high. Similar story for Nifty small cap as well, slightly off the day's high, but nonetheless quite the outperformance here. 0.6% uptick coming in from the small cap space. If you take a look at from the benchmarks, what's done well today, Trend BEL on the back of that Sensex inclusion, top two Nifty gainers today, followed by Hindalco, Tata Consumer, Bajaj Finance, Coal India, Adani Enterprises. On the flip side, it's been a very poor day coming in for these IT stocks on the back of Accenture's results. Infosys down 2.5%. You have HCL Tech that's taken a beating. TCS also, TCS, Wipro, all of them have not done well today. Clearly, IT is the biggest loser of today's trading session. Nifty IT, the top sectoral loser. You have L&T, Hiromoto, M&M, HUL, ITC. So consumption and auto also have not done all that well. So if you take a look at the sectoral gainers and losers today, you have Nifty Media 4% higher, led ahead by Z Entertainment. 11.5% uptick coming in on that stock on the back of solid FY26 focus guidance that they have given, so looking good. This has been followed by Nifty Metal, so these are the only two sectors in the green. You have Pharma, Energy, PSU banks that are almost flat. Slight shade of red on Realty, Nifty Services, Nifty FMCG, Auto and IT, of course, your biggest losers, with IT tanking 1.5%. Certain auto names like M&M, TVS Motor, Maruti, Tata Motors, Exide, all of them have not done that well in today's trading session. But from the broader end of the market, you have names like Garden Reach, KEI Industries, you have Polycab. So the entire wires and cable space has done very well in today's trading session. Something like a Nykaa is up 4%, so this stock has also done very well. But on the losing side, you have names like LT Foods, of course on the back of their subsidiary getting a heavy imposition from the US in terms of countervail duty. You have Ola Electric, remember 0.8% equity changed hands in 7 blocks in the first half of the trading day, so 6% cut coming in on Ola Electric as well. Siemens, of course, lower by 4% on the back of these IT repercussions that we're seeing from Accenture's numbers. Godrej Industry, Dr. Lal Path Labs, Astral, you have United Spirits, OFSS, all of these stocks have taken a beating in today's trade. But that is how we're shutting shop for the day, and well, Nifty is closing slightly in the red, but well, we can hope for a better day tomorrow like Kunal was mentioning. But on that note, it's a goodbye from Shrishti, me and the team that put their show together. Thanks so much for watching.